Love to
Hi,
see you
Mom.
all.
Mom.
Long time no
Hi,
see you.
Mom.
How are you doing, An?
I'm doing pretty well in New Zealand now. Really hope that the border will soon open so I can see you all again in Sydney.
How about you, Finn, my boy?
Just a bit exhausted after one of the biggest deal for my bank. Yeah, I'm happy that I made it, but there's one bad news that I can't make it for the next family reunions. All right, so how's about you? She's doing good.
Yeah, I'm pretty good. Just finished my online class, and you guys know
Okay.
it's so challenging to me.
It's gonna be
Okay.
fine. It's gonna be fine too.
But good to see you all. Just come to visit me whenever you like, especially Finn, my boy.
Yes.
But today I
Yeah.
have a big news for you. I want you guys to consult me. I'm now a 47 years old woman. I want to invest and save money for your youngest sister to go to university in the next 6 years. I have accumulated $300,000. I don't know anything about the financial market. If you guys don't give me any ideas, I probably just invest in gold because you know how I like it. You know how I like it.
We know
Gold.
it, Mom. Yeah, I think I can help you with that.
Okay, because I know you all the top financial analysis. You know, and you are the top financial analysis from New Zealand. Finn, you are the top investment banker in Singapore, and told you gonna make me proud when you have the financial degree. So that's the reason why I don't want you to let me down.
Definitely, we'll not blow up your account.
Okay.
Yeah.
Any idea for younger sister plan?
I think we can certainly help you with that. We still have 6 years as a period to go. I mean, it should be ready enough. And by the way, when you mentioned 300,000, is it in AUD or in USD? Because I know that you really love to accumulate USD, right?
That's my girl. You know, I'm talking about USD.
I think US market is a good idea, but I think because we're on working now, so me, then each of us can help you to add in an additional of 100,000 USD. So we can make it 500,000 USD. So whatever left from the tuition, you use it to, pay for your honeymoon after you retire or something like that.
Just let me know whenever you're ready for the plan. We can call back. Your dad and I will really proud of you guys. Okay, catch up with you later.
All right, see you later.
Okay,
See you later,
see
Mom.
you.
safe.
We will
Okay.
meet soon.
See you.
Bye.
Bye bye. Hi, my kids. How are
Good
you?
evening, moms. Good
Hi,
evening,
Mom. Glad
Hi.
to see you again.
Okay, how was my plan?
We have some discussions, and I think to have something to say to you. Yeah.
Yeah, Mom. After discussing with my sister and brother and conducting the risk profile questionnaire with you, we understood our financial situations.
Okay.
Besides your unlimited love in gold, three of us all agree that we want to invest in US market as well.
Okay.
So our initial investment will be 500,000 USD with a time horizon of 10 years. And then we also estimate that from year 2 to year 6, you will contribute 15,000 AUD per year, which we already confirmed with you. And for the last 4 years, we will withdraw 50,000 AUD per year for our little sister tuition fee. And then our target return will be 6% the average return per year. And for the asset allocation, we will invest in 4 asset classes: the US large cap, US small cap, REIT, and gold. And now I think my sister and brother gonna show you and Dad more about our portfolio management.
You know what, and I think we should do the Monte Carlo simulation for this. Try around 10,000 trials for each scenarios. Yeah, I think that's the way that we can make things objective for mom's goal. Yeah.
Sounds
But I
good.
need,
Very nice. Yeah.
yeah, I need one of you guys to help me with the data adjustments because we need to consider the macroeconomics and then all the things that's going around.
So I think you can take charge on, dealing with the model, the Monte Carlo simulation fin, and I can help you with organizing all the input data and make, data adjustment according to the microeconomic factors as you just mentioned. And that should be great, right?
Okay.
I'm more than happy to do this.
Okay, my kids, really proud of you. Just send me whatever you guys have, because you know mommy loves goals. Okay, see you guys.
In this part, I'm going to discuss how we can adjust the parameters to make it become more reliable in the Monte Carlo simulation. Then I really hope that you can get what I'm trying to explain here. I will demonstrate this process by using one asset class as an example. So we can take VFIAX, which tracks the performance of US large cap stock return. First, we will calculate on the daily returns and generate a descriptive statistic table, analyze some figures to give us a rough understanding of the historical performance. We will also create a bin frequency table to make a histogram so that we can see the distribution of the return. Although the distribution looks quite alike normal distribution, we will test whether normal distribution or t-distribution will be more suitable by calculating the number of extreme outcomes on the two tails. We also try different degree of freedom to see which one gives the closest to the real distribution. That's how I think that t-distribution with 7 degrees of freedom would be suitable. We will do the same thing for other asset class. For the model at the later stage, we will also need to analyze return and volatility for the drift and diffusion. So here we would not totally depend on the overall historical figures. For volatility, 40% weightage would be for long-term historical return, with 60% weightage for short-term 2-year return, as I believe our near future will follow the recent trend to a certain degree. With return, I do some extra work, as we would give 40% weightage for historical figures and 60% weightage for future forecasts. With VFIAX, it is heavily weighted with large cap tech stock accounting for nearly 28%. With COVID-19, tech stock really has a room to play the game. Thus, VFIAX continuously delivered good growth rate in 2019 and 2020, despite the COVID-19 pandemic effect. However, such test surge might be overly favored by investors, and the years to come can experience market corrections. Therefore, based on some expert analysis and my own opinion, the expected 10-year annual growth rate in the 2021 decade would approximately be 5%, and that's how we come up with the final number. Other asset classes, I will only go through the step where we adjust the future return, as the remaining steps are just exactly the same process. For BS Max, this tracks the performance of small cap US stock. This asset class is better diversified. Different analyses are pointing out that the upcoming years would continue to witness an upward trend for small cap stocks, thanks to potential fiscal stimulus and a strong economic recovery fueled by the vaccine in the second half of 2021. Small caps perform well with inflation, especially since their revenue is generated mostly from the US, and they are less likely to hedge against any natural resource they produce. That's why we give a future forecast of 12% in this case. For VGSLX, this tracks the performance of REIT. COVID-19 does leave a bad impact on REIT performance in 2020. There is still belief that the commercial sector will soon recover after the introduction of vaccines. However, in my estimation, there should be a correction in housing markets in the next 10 years, with inflation starting to show up in commodity price, and the government cannot afford to continuously giving incentives like what they just did. That's why we expect the future return for this is only 3% annually for the next 10 years. Lastly, for IAU, this tracks the performance of gold. Gold price has seen a downward trend since its peak in July 2020. This happened because the real interest rate has risen faster than the public has expected. However, I expect this trend to be short-term till 2022, and then gold price will start picking up to a higher level from that. The insurance value of gold is actually increasing, considering the current overvalued stock market and highly volatile environment. I believe gold price is able to yield around 10% annually over a 10-year period. So that's it for how we can adjust the parameter to make it become more reliable. Let me know if you have any questions.
So first, we ask ourselves which assets are we going to invest in and what is the weightage for them. That's why we created this optimization model to satisfy our constraints. You can see here 10% minimum allocations, 40% as the maximum allocations. The risk-free rate we taken from the 10-year Treasury bond yield. The minimum target return is 6%, and we try to reach the maximum Sharpe ratios for the portfolio. This gives us a combination of 10% in the US large cap, 40% in the US small cap, 10% in the REIT, and 40% in the gold stock. The historical data was taken from the 1985 ranging to 2020. So moving on to the Monte Carlo simulations, we got our assumptions for the annualized trips and the annualized diffusion from the historical data and our qualitative research. As An has explained, we then converted them into monthly basis. We also came up with a correlation matrix from our historical research. The Koleski matrix was then derived from the original correlation matrix by using the online tools. In fact, this only takes us around 1 minute to do that. Next, we generated a random variables by using the random functions and then came up with the standard normal random variables using the norm-S inverse functions. The correlated normal random variable was a result of a matrix multiplication between the Koleski matrix and the standard normal random variable. The correlated probabilities is now calculated by using the norm-S functions of Excel. The return for our asset classes were calculated by using the Brownian motions, and we incorporated the t distributions instead of the normal distribution, as we think this will better represent the sample. We also want to take account for the foreign exchange rate between the Australian dollar and the US dollars, because our mom, she deposited the money in Australian dollars for the first 4 years and then withdraw the Australian dollars for the next 4 years. The exchange rate was calculated by using the norms inverse functions with the probabilities as the random separated random variables. The mean and the standard deviation was taken from the historical data. We have made some adjustments to suit our expectation. The target return is 6%. The number of simulation is 10,000. And every time the geometric return is higher than the 6%, we consider them as a success. So we run this model 5 times. The result of the trial is reflected in this spreadsheet. As you can see, we reach an average of 60% success rate, which is quite optimistic for our mom.
My kids, how are you?
Good to see
Hi,
you, Mom.
Okay.
We're all good, Mom.
Okay.
Do you love the plan? Do you love the
I
plan?
completely love it.
All
Your
right,
dad
that's
and
good.
I, after
That's
so
good.
many hours viewing it, we love it, even though we don't understand anything, you know, because your mom just love money, you know. But I'm really proud of the successful rate that you guys given me. All the number, you know, it messed up my mind. But I think we can go with that plan. Okay?
Yes,
Really proud of
definitely.
you. Really proud of you guys.
Yeah, so I think we can certainly help you with the execution. Like, no worries. And I can say is mission possible.